Stellantis, one of the biggest names in the automotive industry, is facing a serious crisis. With a shocking 70% drop in profits for 2024, many are wondering if the company can get back on track. But don't worry, there's a glimmer of hope. Stellantis is projecting a return to revenue growth in 2025. What does this mean for the future of the company, and should investors be concerned? Stay tuned as we break down everything you need to know about Stellantis' comeback plan, right here on Next Gen Financial Future. Welcome back to Next Gen Financial Future, where we keep you informed on the latest developments in the world of finance and business. Today we're diving deep into Stellantis, a global automotive giant that's been hit hard by a tough year in 2024, but is now aiming for a comeback. Let's break down the key takeaways from Stellantis' financial report and their plans for the future. To start, let's talk about the numbers. Stellantis, which owns famous brands like Jeep, Dodge, Fiat, Chrysler, and Peugeot, reported a full-year 2024 net profit of just €5.5 billion, around $5.8 billion. That's a massive 70% drop from their 2023 profit of €18.6 billion, $19.5 billion. Analysts had expected a slightly better result, predicting the profit would be around €6.4 billion, so the 70% drop was certainly a blow to the company. So, what caused this sharp decline? Like many other automakers, Stellantis has been battling several major challenges. Supply chain disruptions, rising production costs, and the overall volatility of the global economy have all played a role in these disappointing numbers. The auto industry has been in a tough spot, with both traditional manufacturing hurdles and the rapid transition to electric vehicles (EVs) causing strain. But despite these struggles, Stellantis isn't ready to throw in the towel just yet. They're focused on the future, and the company has outlined a recovery plan that they believe will return them to growth. But despite these struggles, Stellantis isn't ready to throw in the towel just yet. They're focused on the future, and the company has outlined a recovery plan that they believe will return them to growth. However, the road to recovery won't be without its bumps. The company is still navigating through elevated industry uncertainties, and it's in the process of finding a new CEO after the sudden departure of Carlos Tavares late last year. In the meantime, Chairman John Elkann is stepping in to lead an interim executive team. Despite the tough financials, Stellantis has made significant strides in other areas. They've launched new multi-energy platforms and products, and they've begun production of EV batteries through joint ventures. Moreover, their partnership with Leapmotor International is already underway, setting the stage for future growth. Stellantis is setting its sights on 2025 as a year of recovery and growth. The company has said that it expects a return to profitable growth and positive cash generation starting next year. This reflects the early stages of a commercial recovery as Stellantis works to address current challenges and adapt to the shifting auto industry landscape. They've acknowledged that elevated industry uncertainties, like fluctuating raw material costs and shifting consumer demand, are still a concern. But they remain confident in their ability to bounce back. To help achieve this, Stellantis is working on improving its financial performance through several key strategies. They're focusing on gaining market share, enhancing their EV offerings, and ramping up production of new multi-energy platforms. These platforms are crucial for the company as they transition from traditional gas-powered cars to more environmentally friendly, multi-energy vehicles, including hybrids and fully electric models. The launch of these new products is expected to pick up speed in 2025, and it could help Stellantis regain momentum in the market. Another factor that's been hanging over Stellantis is the sudden departure of their former CEO, Carlos Tavares, late last year. This leadership change has created uncertainty at the top, as the company now searches for a new CEO. The good news for investors is that Stellantis has confirmed they plan to appoint a new CEO in the first half of this year. In the meantime, Chairman John Elkann is leading an interim executive committee to guide the company through this transition period. Leadership transitions are always challenging, but Stellantis is focused on ensuring they don't miss a beat. Elkann has stated that the company is committed to hitting its strategic goals, including expanding its EV footprint and maintaining strong relationships with both consumers and investors. The leadership change may cause some short-term uncertainty, but Stellantis is working to maintain stability while also looking to the future. Despite the tough financial results, Stellantis has achieved some important milestones that may help them recover. For example, the company has started production of EVs through joint ventures, which is a big step forward in their transition to electric vehicles. They've also launched their partnership with Leapmotor International, which aims to expand Stellantis' reach in the Chinese market, a huge growth opportunity. In addition, Stellantis has begun rolling out its new multi-energy platforms and products, which are expected to continue in 2025. These platforms are not only more sustainable but also designed to meet changing consumer preferences for cleaner, more efficient vehicles. This focus on innovation and sustainability is a key part of their long-term strategy. So, what's next for Stellantis? The company has emphasized that 2024 was a year of contrasts, with major setbacks alongside important strategic accomplishments. Moving forward, Stellantis will continue to focus on regaining market share, improving its financial results, and expanding its electric vehicle offerings. While 2025 might not be a smooth ride, they believe their recovery plan will pay off in the long term. Stellantis has certainly faced a challenging year, with a massive drop in profits and significant hurdles to overcome. However, their recovery strategy seems to be on track, with key initiatives like the rollout of new platforms, increased focus on EVs, and a leadership transition underway. If their plans succeed, we could see a very different picture for Stellantis in 2025. If you're keeping an eye on Stellantis and other major companies in the auto industry, make sure to hit that like button, subscribe to Next Gen Financial Future, and ring the notification bell so you don't miss any updates on the latest financial news and trends. We'll continue bringing you all the information you need to stay ahead in the world of finance and business.